Have you ever wanted to jump into investing, but just didn't know where to even begin? Well, today, we're going to pull back the curtain on stock analysis. And I promise, by the end of this, you'll have two simple, powerful skills to look at any stock and know what you're seeing.
Yeah, if you've ever pulled up a stock page and just seen a wall of numbers and squiggly lines that felt like a totally foreign language, you're not alone. But here's the thing, it's actually way simpler than it looks. We're going to break it all down, piece by piece.
So, here's our game plan. First, we'll get you set up with a great free tool. Then, we're going to learn how to read a stock chart like it's telling a story. After that, we'll crack the code on 4 super important numbers. And finally, we'll wrap it all up into one simple checklist you can use anytime. Sound good? Let's do it!
All right, the only tool we're going to need for this is Yahoo Finance. It's totally free, super easy to use, and honestly, it has everything you need when you're just getting started.
And it could not be easier to use. You just head to the website, type in a company's ticker symbol, that's just its nickname on the stock market, like AAPL for Apple, and boom, you click on it and you're right there on its main page.
Okay, time for our first new skill, reading the stock chart. Now, I want you to stop thinking of this as just a random jagged line. Instead, think of it as the company's story told in a picture. It shows you all the ups and downs over time. Now, you'll see a bunch of options like 1 day, 1 month, whatever. But for us, as long-term investors, the 1 year and especially the 5-year charts are our best friends. The 1-year view shows you the recent drama, sure, but the 5-year chart, oh, that tells you the real story. It shows you the company's overall health and whether it's built to last. So when you're looking at that 5-year chart, you just need to ask yourself a few basic questions. Is the line generally heading up and to the right? Great sign. Do you see any massive, sudden drops? And if you do, did it bounce back? That shows you the company is resilient. What we're really hunting for is a story of slow, steady growth over the long haul. All right, you've mastered the chart. Now for skill number 2, understanding a few key numbers. And don't worry, you don't need a calculator or a degree in finance. We're going to focus on just 4 simple stats that tell you almost everything you need to know. First up, market cap. This sounds super technical, but it's not. All it means is the total price tag of the company if you wanted to buy every single share. It's the quickest way to figure out just how big this company is. So, as a beginner, a really good rule of thumb is to look for companies with a market cap over $10 billion. These are the big, established players. You might hear them called blue chips. They just tend to be a lot more stable, which is a great place to start. Okay, number 2 is the PE ratio. That stands for price to earnings, and this one is super important. It basically tells you how expensive a stock is compared to how much money the company is actually making. It's a quick way to get a feel for whether a stock is a bargain, fairly priced, or maybe a little bit pricey. And here's a handy little guide. If the PE is under 15, it could mean the stock is on sale, undervalued. A PE between 15 and 25 is often considered pretty fair. And if it's over 25, well, that usually means investors are expecting some seriously big growth from that company in the future. This third one, dividend yield, might be my favorite. Some companies literally pay you just for being a shareholder. They take a slice of their profits and mail you a check. That payment is a dividend, and the yield is just the percentage of the stock's price you get back each year. It's like a little thank you bonus. And last but not least, the 52-week range. This one's about as simple as it gets. It just shows you the highest price and the lowest price the stock has sold for over the last year. It's a great way to see at a glance if the current price is near its yearly high or low. It just gives you some context. Okay, so you know how to read the story of the chart, and you know how to decode the most important numbers. Now let's put it all together. This is your simple 4-step action plan. This is it, your 4-point check. Next time you look at a stock, just run down this list. Number 1, does that 5-year chart look like it's heading in the right direction? 2, is the company worth more than $10 billion? 3, is that PE ratio in a reasonable zone, say 15 to 25? And 4, does it pay a dividend? Now that last one's optional, but it's a really nice perk. If a stock checks at least 3 of these 4 boxes, it's probably a pretty solid choice for a beginner. And that's really it. I'm serious. In just the last few minutes, you've learned how to read a stock chart and how to evaluate a company's basic financial health. See? Investing doesn't have to be this big, scary, complicated thing. You've got the tools now. So that just leaves one question. You know what to look for, and you know where to find it. All that's left is to give it a try. So, which company are you going to look up first?